Warren Buffett once said, "The snowball effect is the most powerful force in the universe. It's the best way to accumulate wealth." Picture a small snowball rolling down a hill. At first, it's tiny and almost insignificant, but as it gathers more snow, it grows larger and larger, turning into a massive, unstoppable force. This analogy perfectly illustrates the dividend snowball effect. When your dividends accumulate and are reinvested, they begin to compound, growing exponentially over time. Renowned investors like Warren Buffett have harnessed this powerful principle to build extraordinary wealth. Today, we'll delve into two distinct strategies to generate $5,000 in monthly income. One through a significant upfront investment, and the other through consistent, smaller monthly investments. We'll also examine a diversified portfolio that could potentially triple your returns over the long term. Make sure to stay until the end, where I'll reveal two of my favorite tools that are indispensable for estimating future income and planning your investment strategy effectively. Understanding the concept of the dividend snowball effect is fundamental, but knowing how to apply it in a practical way is the next crucial step. The core idea is to reinvest your dividends back into the same stocks, which allows you to buy more shares. This reinvestment cycle generates additional dividends, and over time, this process accelerates, leading to exponential growth in your overall investment. Setting up your portfolio with strong dividend-paying stocks and allowing your dividends to compound over time is key to building significant wealth. The first step is to set a clear and attainable monthly dividend income goal. Whether you're aiming to earn $1,000, $5,000, or even more each month, having a specific target helps shape and refine your investment strategy. In this video, we'll focus on how Oliver, an average investor, can achieve $5,000 per month in dividends by the time he retires. Having a well-defined goal not only provides you with direction, but also allows you to track and measure your progress effectively, giving you the motivation to stay on course. Before we go over Oliver's approach, feel free to check out the video that will appear now on the top of the screen if you're planning on starting to build your dividends portfolio. Let's consider Oliver's approach. He decides to make an upfront investment of $110,000 into a stock that offers an 8% dividend yield, a 7% dividend growth rate, and a 6% annual share price appreciation. Now let's break down how this investment would grow over time. After the first year, Oliver's investment would have grown to $11,400, already showing signs of progress. By year 30, Oliver's investment would have grown to a staggering $710,000. At this point, this investment would generate an impressive $65,500 in annual dividend income, translating to approximately $5,421 per month. However, not everyone has a large sum of money to invest up front. This leads us to the second strategy, where Oliver chooses to invest $200 each month into a high-yield, high-growth stock. This strategy may seem more modest, but over time, it proves to be remarkably powerful due to the regular contributions and the continuous compounding effect. After 12 months, Oliver's monthly investments would grow to $2,400, which might seem modest, but is a solid start. After 30 years, Oliver's monthly investments would amass an incredible $1 million. With this approach, Oliver would be generating about $1,137 per month, significantly surpassing the $5,000 monthly goal he initially set. It's evident that the second strategy yields superior results due to the consistent monthly contributions and the powerful effects of compounding dividends. However, finding a single stock that consistently offers high dividends over such a long period can be challenging, which is why a diversified portfolio approach often proves to be more effective and safer. To reach the goal of a $5,000 monthly dividend income, it's crucial to build a diversified portfolio. This portfolio should include a mix of dividend aristocrats and kings, dividend ETFs, and dividend-paying REITs. Let's break these down. Dividend aristocrats and kings. These are companies known for their long history of consistently increasing their dividends. For example, Cintas Corporation offers a dividend yield of 1.78%, coupled with a growth rate of 21.5%, and a remarkable share price appreciation of 27.7%. Abbott Laboratories, another solid option known for its reliable dividends and growth. Bank of America, a financial giant that has consistently delivered value to its shareholders. Dividend ETFs. These exchange-traded funds provide diversification across multiple dividend-paying companies, reducing risk. Examples include Vanguard Information Technology Index Fund ETF. This ETF features a yield of 1.87%, a growth rate of 12.58%, and an appreciation rate of 11.54%, making it a strong contender in a diversified portfolio. Schwab U.S. Dividend Equity ETF, known for its stable dividends and solid performance. Vanguard Mid-Cap Index Fund ETF provides exposure to mid-cap stocks, adding another layer of diversification. Dividend-paying REITs. Real estate investment trusts that offer high yields are also essential for a diversified portfolio. Consider American Tower Corporation, with a yield of 3.91%, a growth rate of 16.99%, and a share price appreciation of 9.81%. This REIT is a strong addition to any portfolio. CubeSmart, another high-yield REIT that provides exposure to the real estate market. Combining these elements into a diversified portfolio would result in an overall current dividend yield of around 2.52%, a dividend growth rate of 17.67%, and a 10-year average share price appreciation of 12.34%. Here's how the portfolio would grow. With a one-time investment of $10,000. After the first year, the portfolio would grow to $1,486. After 30 years, it would amass $1 million, yielding around $1,585 per month in dividends. With a consistent monthly investment of $200. After the first year, the portfolio would grow to $2,400. After 30 years, this approach would accumulate $2 million, generating approximately $1,737 per month. Speaking of which, if you're interested in starting to build your dividends portfolio, check out the video above. To maximize your returns and optimize your strategy, use dividend calculators like those available on TipRanks and track your dividends. These tools help you project future dividend income and growth based on various investment scenarios. For example, TipRanks provides projections based on past performance, giving you a realistic expectation of future returns. Track Your Dividends offers a flexible platform where you can build and analyze your entire portfolio, making it easier to plan and track your investment journey. Both tools are invaluable for estimating future income and strategizing your investments. I want to take a moment to let you know that if you're serious about starting your investment journey, the Road to Successful Investing ebook is an excellent resource. It provides everything you need to make your first investment with clarity and confidence. The ebook covers essential concepts, from understanding why investing is crucial to setting goals, assessing risk and return, and mastering stock analysis. With practical examples and illustrations, this 76-page guidebook is designed to equip you with the knowledge needed to navigate the stock market successfully. Plus, it comes with a 60-day money-back guarantee, so you can try it risk-free. You can find the link in the description below. Remember, starting early and consistently investing is the best way to harness the full potential of the dividend snowball effect. I encourage you to explore these strategies and tools to achieve your financial goals and secure your future. If you found this video helpful, make sure to hit the like button and subscribe to the channel. Don't forget to click the bell icon to receive notifications for more tips on achieving financial freedom. Check this video if you're interested in building your dividends portfolio. Also, let us know in the comments below. What's your strategy for accelerating your dividend snowball? Or what's the biggest challenge you've faced in building your dividend snowball? Thanks for watching, and see you in the next video.